Hi everyone, hope you're all well. It's been a while since I did a video again, so I thought I'd give you an update on a couple of announcements from the Chancellor recently that I think may be useful to you all. Um, the first one's been well publicised and may or may not be useful. It's for employers basically. The second one hasn't been that well publicised, but could potentially affect all of the clients that we've got, anyone within the self-assessment system, and it might be quite useful for a lot of people. So make sure you pay attention to that one. So the first one is the new job support scheme, which is essentially replacing the job retention scheme, which is more commonly known as the furlough system. So I suppose it's not as good, it's not as advantageous, should we say, for the employer and the employee from the government. But given that they said that they weren't going to extend furlough past October, it's it's a bonus really, and it does kind of spread the burden of responsibility for the costs of keeping that employer equally between the employer, the government, and the employee. So the new system is applicable from 1st November onwards. It's open to all businesses and all employees, so they didn't have to be previously furloughed, or if they had been previously furloughed, that's fine. And the basic premise is that any time in which the employee isn't working, so they're essentially on furlough leave as you know it, the cost of that furlough is split equally between the employer, the government, and the employee. So if somebody were not working at all, the employer would pay 1/3 of the salary, the government would reimburse you 1/3 of the salary, and the employee loses out on 1/3 of the salary. So it's not anywhere near as good as the furlough, where the government were basically paying 80% of any hours not worked, but it's better than nothing, and it's a fairer split essentially. Where it probably becomes less useful is if people are going back part-time. So if you imagine an employee who's on, let's say, a couple of £1,000s a month. By the way, the government support, I'm not 100% sure, but I would be pretty confident that it's limited in the same way the furlough was, to a sort of maximum cap of a salary equivalent of 30,000 a year. But let's say somebody's going back part-time and they earn a couple of £1,000s a month, and they're working 50% hours. So the employer still has to pay 50% of the salary for the hours worked. And then that other 50% in which they are essentially being furloughed, the employer pays 1/3 of that, i.e. 1/6. The government would give you 1/6 back, and the employee loses out on 1/6 of the wages. So if somebody's going back on 50% hours, the employer has to pay 4/6 of the wages. The government will only reimburse you 1/6, and the employee loses out on 1/6. So it's as I say, not as good, but pretty fair on balance, I imagine. And we're yet to see how much uptake there's going to be. As many of you know, Elaine's working really, really hard, keeping on top of all these really complicated furlough claims. Now it's been made more flexible, so we're continuing to offer that service. If you are going to be utilising it November onwards, then do let us know so that we can get everything sorted out for you, and you can use the furlough at Pert & Bevan email as you previously had done. So that's that one. The second update is HMRC have put in are putting in a really a relatively simple time to pay process for any tax that any of you might have due that is part of the self-assessment system from next January onwards. So what I mean by that is, if you do a self-assessment tax return and you pay income tax and national insurance potentially on dividends, investment income, property income, and sole trade or partnership profits, which nearly all of our clients do, then when you get to next January and you've got that kind of tax payment due as you do each year, they're making it relatively simple to put a time to pay agreement in plan and for that period. So if just to kind of rewind a little bit, if you remember one of my earlier videos, the July 20 in self-assessment, you pay that big payment in January, balancing payment on account, and then you make a second payment on account in July. So the July that's just gone, July 20, the second payment on account was due towards the 1920 tax year. And HMRC automatically allowed you to defer that payment anytime between July and January next year. Okay, so that payment is due by January 21 if you've not paid it already. They're allowing you to take that July 20 payment and roll that into this time to pay agreement that I'm talking about, which allow you to spread your payments next year. So you take that July 20 payment if you're still owing it, and then the balancing payment and first payment on account for the 1920 and 2021 tax year that's due next January. So what I mean by that is, in layman's terms, is that big tax payment that you make in January, due to make in January next year, that one. So you've got the July 20 payment, the January 21 payment. Those amounts can be brought together and using one of two methods. There's an online system where you can do it all yourself, self-serve online, or there's the payment support helpline that HMRC have got. I'll put the details of both of those in a link in the email description so that you can find those if you need to. So you take those amounts due, and if the criteria are that if the amount is more than £32 for some reason, but more importantly, if the amount is less than £30,000, they will allow you to automatically make a time to pay agreement for any time period up to 12 months with monthly payments. So if you think about that, if you've not yet made your July payment and you've got your tax on your dividends or your sole trade profits coming January next year, you can put them all together, go online without even speaking to anybody, and make a time to pay agreement for next year, which would be really helpful to a lot of people, just to know where you are tax wise and to give you that kind of peace of mind for the back end of this year over Christmas and stuff, knowing that you haven't got that big chunk coming. Got to pay all at once. Now, two things that are really, really important in that you can only make that agreement with them if your all other taxes, etc., are up to date. So if you've got taxes that are still due from the 18-19 tax year, the January payment last year, or other things, you need to get those all sorted out now and in place, because they won't allow you to make that time to pay agreement next year if you've still got other taxes owing or other time to pay agreements in place. That's really important. The second thing to remember is that, as I've said, you make these payments January each year and July. So you can, the July payment that's just gone and the January payment next year can go into this time to pay agreement. You're then going to have another payment due 6 months later, the July 20 payment on account toward the second payment on account towards the 2021 tax year. You're going to have to make sure that as part of your planning next year, you have the money set aside for that payment, because that's not going to form part of the time to pay agreement you make in January next year. And if you're under a time to pay agreement and you are late with other tax payments, and I've seen this happen so many times, HMRC are within their rights to just automatically cancel that time to pay agreement. So, so the key things to remember are that any taxes that you've got outstanding at the moment, other than July 20 payment account, get those sorted and get those settled up. Budget out the tax for next year and make sure you factor in paying the July 20 payment on account, July 21 payment on account in full. So I think that there's the other thing to think about with this is timelines. Tax is due January next year. They're saying that this time to pay system is going to be open. They're going to close it after 60 days. So you've got due end of January, so you've got February, March. So 1st of April 21, they'll close it down. They won't allow that anymore. So again, it's really key that you get it done in good time. The second thing to remember is that your tax is due end of January. On the 1st of March next year, there's a 5% surcharge on any tax that's overdue at that point. So what I would suggest is, once you know the amount, get it done straight away. Get the time to pay. If you're going to make the agreement, then do it early, because if you do it in March, for example, which you'll still have time to do it, but there will be 5% more included in the balance that you owe them, because they'll have charged you a 5% surcharge at the end of February. I think that the other slight cost to doing this is that they will charge the interest on the amount on the calculation. So when you sort of put the agreement in place, they'll work out how much interest is going to be due on the amounts that are being paid late. But HMRC rates are very competitive, and so it won't be expensive finance, put it that way. They've said that agents can't facilitate this agreement. It has to be done by yourselves, and they are willing to consider time to pays for people who for amounts of more than £30,000, or people who want more than 12 months, which is encouraging, but it's not guaranteed. The way that these things happen is that can't be done using the online system. You have to call the payment support helpline. and speak to an advisor. And from my experience with these advisors, it's like a customer service experience with any other business. Ultimately, you get some people who are really accommodating, friendly, helpful, seem quite flexible, and will put it in place. And you get some who are just difficult. Will be reading points from a crib sheet, and computer says no kind of thing, and won't allow you to make that agreement with them simply and easily. They ask for lots more information, or they just seem like they're having a bad day and they're very difficult. On so many times I've just tried to make an agreement on behalf of a client, not got the answer I wanted, and tried another couple of times until I got somebody who was useful and helpful, and done it that way. So if you don't want to do it online, or if you've got an amount that's more than 30,000, or you want more than 12 months, then again, that payment support helpline is going to be so busy later this year. Well, it's already going to be busy, and it'll get more, busier and busier as the year goes on. So the thing that I'd say to all of my clients who think this is going to be useful for them and think this is really important, and anybody else generally, is that all accounting periods that up till going about the last couple of years do factor into what dividends are going to be included on your 1920 tax return, or what self-assessment profits are going to go into your 1920 tax return. It's that tax bill that all of this is going to be based on. So if you've not yet got your accounts into us for any period, even if you've got a September 20 year end that's just finished, some of that year is going to be into that 1920 tax year, and therefore it's going to affect what we put on your self-assessment return. If you've got accounts that are due to be filed soon, or we need the information for your self-assessment return for property rentals or for your dividends, all that kind of stuff, it's we get increasingly busy, exponentially busy between now and the end of January next year. If you imagine, a lot of our clients have got March year ends, which have to be filed by the end of this year. Everybody knows when the self-assessment tax is due, so people seem to want to sort of get stuff into us in December and January, and it's just so difficult for us to manage that. If we're doing all this additional work to try and help our clients and know where they stand with their taxes, and help them be in a place to understand what the payment plan might look like next year, is going to be even busier and busier for us. So there's people who get their records into us in December and January. We're just not going to be able to offer the level of service you're used to. So if you're watching this and you think that understanding what your tax position is for early next year is important, get your records into us now, so we can get them in the process, get the accounts done nice and early, get your tax bills sort of identified nice and early, and then you could go online or call the helpline, put the payment plan in place, and then you've got total peace of mind for next year. So I hope that's useful. If anyone's got any questions, as always, just get in touch. I think, as I mentioned, I'll put a link in the email body for the where to find the details of this Time to Pay scheme. And if contact myself or Elaine or any other member of the team if you've got any questions about the job support scheme or anything that I've been discussing today. Okay. As always, stay safe, and I'll speak to you soon. Thanks. Bye.